The days in which not owning Bitcoin is a safe choice are over. Today, if you or anyone think that not having Bitcoin is the safest choice, think again. This is exactly the kind of thinking that will make people miss the greatest opportunities on their lifetime. Yes, when Bitcoin was 20,000 and people were not buying, I understand that. Today, Bitcoin has surpassed 120,000, making the best performing asset of the year. If you calculate between December and now, Bitcoin is up over 25%. I hope in a few minutes to demonstrate to you that this is not a hype. These numbers make sense because Bitcoin is inverse to any other commodity. I'm going to give an example to you. All commodities, if you look at gold, petrol, uranium, those commodities were first available to big money, financial investors, and then became available to the people. Bitcoin is the opposite. It first became available to the people, and then only now is becoming available to financial institutions, and only now in the next 2 years, maybe 3, financial advisors are going to be able to recommend Bitcoin to their clients. And just in case, if you are new to this channel, my name is Booth, and in this channel we talk about cryptocurrency, geopolitics, and everything else that may affect the financial markets. If you haven't subscribed to this channel yet, please take a moment to do so. We found out that this is the best way to spread the message to more people. Now let's go back into the video. Institutional inflows are setting records. Selling pressure is near decade lows. Exchanging flows are collapsing, and whales are holding tight. On-chain data shows one thing: real buying, real money, real conviction, this time from financial institutions and big money. It's important to understand that big money don't talk in terms of thousands or hundreds of thousands. Those people talk in terms of billions. That means a lot of money coming to the space when over 95% of all Bitcoin is already being issued. And even today, 1.5 years after all the ETFs, here in Europe and in most first world countries, financial advisors, they do own Bitcoin. However, they are not allowed, or they are not recommending to their clients. I know personally people who own Bitcoin, are financial advisors, are even brokers, and they are not allowed to recommend Bitcoin to their clients. And just a simple fact for you: the number of Bitcoins being sent to exchanges by large holders wallets with over 100 BTC. Imagine this, wallets that has over 100 BTC sending BTC to exchanges, of course, to sell BTC, has dropped from 62,000 to just 7,000. That is an 89% drop in the supply pressure from whales. The last time supply was this low was back in 2015. On-chain data shows a 71% increase in Bitcoin held by accumulation wallets. This accumulation, in my view, is done by institutional investors and long-term hodlers. They are quietly increasing their positions with conviction. That means they are not going to be selling their BTC anytime soon. And even with all this chaos, tariffs, wars, Bitcoin price is not crashing. And in my view, on the past 2 weeks, Bitcoin has stopped being a speculative asset. You need to understand, whenever there is chaos in the world, speculative assets drop in value. Bitcoin has gone up despite all the tariffs from Donald Trump and all the escalation of wars. It has just surpassed 121, 122. So the fact that the price has not dropped with chaos shows that people and large institutions are seeing Bitcoin as a safe haven, as a shield from problems, not a speculative asset. Let me make this clear. US job data blew the past expectations with 147,000 jobs added in June versus the forecast of 110. That means more spending, more inflation, and less trust in fiat. Also, the Federal Reserve has given some signal that they're going to make more cuts. That means more printing money. That means increasing the amount of fiat in circulation and therefore diminishing the purchasing power of the fiat already in circulation. And for those who still believe it is too late because Bitcoin has surpassed 120,000, here's the thing for you. There's a metric called MVRV, and that metric has successfully predicted the top. And according to that metric, we are still about 14% below the top. Now, past performance does not guarantee future performance. But if that metric is correct, that means we still can see a Bitcoin at 130, 131,000. Another thing that we can conclude from this metric is that we are on the sweet spot where smart money gets in before the public FOMO. One thing we need to understand about this metric, MVRV, is that it only adds to the cap when the coin is sold at a higher price than when purchased. So let's say someone bought Bitcoin at 50K and sold at 45. That does not add to the metric MVRV. That means what we're having right now is the following: real buying. People are putting a lot of buying pressure. And remember, the price of everything depends. Do you want to buy or want to sell? And whenever we have buying pressure, that means the prices will continue to go up, and it's not a hype. And let me tell you something that most people may have missed entirely. There were over $1 billion in short positions, which were wiped out during the last leg of this rally, the previous one that pushed Bitcoin to 119,000. Now, if you do not know what short is people placing a bet that Bitcoin is going to go down in value. And when it starts to go up in value instead of going down, those people in the short position have to buy very quickly, causing even more buying pressure and pushing the price even higher. And then those who are lagging behind or waiting to buy or expecting the price to go down, the price continues to go up. And then those other people who are also shorting have to continuously buy at a higher price. And when they buy a higher price, that pushed the price even further. Now, those short positions had pushed the price to about 117, 118,000. Today, Bitcoin price is over $122,000. Another thing that's happening is the ETF inflows. We have 770 million in 1 week. The crypto trading volume has exploded by over 47% in just 24 hours, with a total market cap jumping over 5.24% to $3.65 trillion. And if you still think Bitcoin is unsafe, think once again, because even public companies are getting the message. These companies are large public trading firms listed on major stock exchange with a financial reporting, and the amount of Bitcoin held by those companies have increased 33% since January this year. Now, you may be asking, why are these public trading companies buying BTC? That's because they're seeing inflation in the horizon. One thing we need to understand, Donald Trump just passed the big, beautiful bill, which means more money printing. Jerome Powell already gave some signal that he may cut the rates. That means more inflation. Remember, inflation is the increase of the money supply. And once you increase the money supply, you decrease the purchasing power of the money already in circulation. Now, for the first time, there is some benefit to the spending, because remember, the US has a strategic reserve in BTC. So the more they inflate, the more the strategic reserve will increase in value. And once the US has Bitcoin as a strategic reserve, that means the rest of the world has to take Bitcoin seriously as a financial instrument and as a possible sovereign grade collateral. Now, back to the big and beautiful bill that will increase the US deficit by 3.3 trillion. And remember, once again, the increase of the money supply means that scarce assets like Bitcoin will continue to increase in price tremendously. Now, I hope that this video may have changed your mind and no longer seeing Bitcoin as a risky asset, because remember, large public institutions are using Bitcoin as safety haven. BlackRock and other institutions have that on their balance sheet, and the US government already has a strategic reserve in BTC. That means institutional money, smart, sophisticated money, are not seeing Bitcoin as a risky asset, but a scarce commodity. I hope this video may have helped you to change your mind. And no, you are still early, because remember, as institutions and as financial advisors in the next few years, we'll be able to recommend Bitcoin to there. And no, you're not late to the party, because right now, Bitcoin is going to become available to the financial institutions and financial investors instead of the regular public. And those institutions and those companies, they buy Bitcoin in hundreds of millions and in billions, not a couple of thousand as you and I in retail may do. And with things such as this happening, no longer having Bitcoin is the risky thing. Bitcoin has an unbroken record of an average 50% gain every year. Bitcoin is up over 30 million% from the first time it has priced. And it seems like Bitcoin will continue to be the best performing asset for the foreseeable future. So not having Bitcoin is a reckless thing to do. If you are curious, keep learning. If you're skeptical, ask better questions. But whatever you do, know this: the window of ignorance is closing. That's it for today. And once again, stay curious and stay hodling.